Australia has seen a massive property boom which makes other countries jealous of the rise. In this race to see who can create the most indebtedness, Australia has really been making some serious strides. There comes a time, however, when the music stops, the party is over, and the hangover begins to set in. You came here for the truth, so let me unveil that for you. Today we are going to have our focus on Australia. Let's begin. After 5 years of surging prices, the market value of the nation's homes has ballooned to a whopping $5.6 trillion. That's more than 4 times the GDP, bigger than the US and the UK markets at their peak. What is going on in Australia is the same that is going on in other places around the world. And I'll show you how that's the case. Australia's obsession with property is firmly entrenched in the nation's economy and the psyche, fueled by record low interest rates, sound familiar, generous tax breaks, banks hooked on mortgage lending, and primetime TV shows where home renovators are lauded like sporting heroes. This is exactly what is going on in Canada and other places. I could have replaced Australia with Canada, and there would be no difference. For many, homes morphed into cash machines to finance loans for boats, cars, and investment properties. The upshot, households are now twice as indebted as China's. Twice. And that's saying a lot. What I had explained in previous videos before is that many people are using home equity line of credit in order to finance, as they say here, boats, cars, and investment properties. So they pull all the equity out with this silly notion that there's no need to worry because housing prices will always go up. And while they can do so for long periods of time, eventually they have to come back around. Now, many people would say, well, look at all the money you would have made in that period of time. You could have pulled the equity out, bought another investment property. It can continue to rise. Now you have 2 properties versus 1. That's all fine. However, if you are right at that borderline of being able to pay your bills and you have a little issue, perhaps with mortgage rates increasing, you're going to run into a big problem. As well as the fact that if the housing prices start coming down, and you have no equity in your home, you might just lose it. So let's get into some of these charts here. I have several to show you quickly. Aussie households have racked up record private debts and aren't getting the pay rises to help service them. And this is every country, in fact, most countries, where your wages are not corresponding to your housing prices unless you're a CEO. If you're a CEO, then you're doing well. If you're not a CEO of a major institution, you're not doing well. That's a core concern for the RBA and frequently cited as a deterrent for hiking interest rates. Macquarie has said that such debt levels mean that hikes will have triple the impact on consumers than tightening cycles in the mid-1990s. That's what I'm talking about here. When you have interest rates at this low and they claim that everything's okay, everything's doing well, but at the same time, they know, they're very certain about this, if interest rates rise, we're going to have a big problem. So then we have a little difference of opinion. If things are normal, then you should normalize rates. How does that sound? All right, on to the charts. From boom to burden, Australia's housing market is 4 times the size of its economy. And when you look at this, I was very surprised to see this. Canada seems to be on the lower end of all of this. Of course, that's not really putting it into true perspective. The US, we saw deleveraging that occurred. That was a fact, only because they were forced to. And then things had risen ever since, for sure. But looking at the sheer increase that we had seen, Australia, New Zealand, UK, it's surprising to me how high the housing prices have gone in these areas. Of course, major cities, not everywhere. There are always pockets. Betting on the house. Australia's lenders are the world's most exposed to housing debt. Again, I was very surprised. Because in Canada, if you look at it, just the two, primary offenders being Vancouver and Toronto, you get a very unusual picture of how the hell this is supposed to continue. It just doesn't make sense. You have to understand the way that people have been buying all these luxury vehicles. Every day, I see more and more luxury vehicles in Canada. I'm sure it's the same in Australia. And for any of my friends in Australia, if you want to comment on this, there are every luxury car imaginable on the streets. When you're seeing BMW, Mercedes-Benz, and Audis are a dime a dozen, and then you often see Lamborghini, Ferrari, McLaren, anything, any of these very high-end Bentleys, I'm seeing Rolls-Royce, I'm seeing all the time, not this, one-off occurrence and people stand there to take pictures. It's happening all the time. Maseratis. Where are they getting the money? Well, surely if they're a CEO, as I said, they're doing well, their wages are increasing, they're able to make more money. But the majority of people are not CEOs of major corporations, of course, and so their wages aren't keeping up. So what do? Well, they have a home, and they've been pulling the money out of their home to then finance different items, cars, and other, let's call them luxury goods. That's what's happening in Australia right now. I need to look into the statistics for other places like Norway as well, but I'm sure it's a very similar scenario. Swimming in debt. Australian households are the second most indebted in the world. And that is something. Good old Canada. Number 3. Congratulations. You get the bronze medal. Switzerland is a very interesting one. When you look at 120+% of GDP here. When I look at the amount of debt that somebody has, for example, if they own $500,000 on a mortgage, which is, today is very good. If somebody only has a $500,000 mortgage, then they're doing well. Let's just say for a moment, $500,000, they earn $40,000 to $50,000 a year. Maybe there's 2 incomes. Let's just say $80,000 a year. They can, after a 25-year period, amortizing that mortgage over that period, reasonable interest rates, they can pay it off. Okay, it's no problem. But if you're CEO or if you're earning $250,000 a year, maybe your household income is $250,000, even higher, you can pay that mortgage off in no time. So the amount of debt you have, I think, is needs to be looked at compared to how much you earn. Right? A lot of these very wealthy people have a lot of dividends. They have a lot of passive income coming in. They can pay off their bills. They can pay off their mortgages and all this. And they perhaps earn a big salary. They can deal with that debt much easier. But the majority of people are not in that situation. The average person. The average person is burdened by debt. You may not be, but the average person. Okay, because I hear a lot of silly comments around, and let's just address this. Maybe you are doing fine. Maybe you've made a lot of money on your home, as people like to say, or in the stock market, and that's fine. However, the average person has not. So let's address it that way. All right, quickly here. Sale of the century. Australian house prices have risen the second most among the G20 economies since the year 2000. That's very interesting. You can see that Canada and Australia tied for the silver. And it looks to me like most countries are seeing the exact same thing. Housing prices have increased, rent prices have increased, and unfortunately, it has not benefited people. Or once we have a little issue coming up, they're going to realize that they haven't benefited from this, and they've simply taken advantage of it. They've pushed it too far, and they're going to end up being quite sorry that they ever took a home equity line of credit or a second mortgage. Cranes still reign. Now, looking at the amount of cranes in Sydney, Australia, I can only imagine what it looks like, because Toronto is filled with cranes everywhere. And it seems like Brisbane, Melbourne, and Sydney all in the top here. This looks like Q4 of 2017. So we will see an expansion of that taking place. I'm just worried because of all this. You put a lot of jobs into it. A lot of the market is revolving around it. People taking money out and they're using it as ATMs. And unfortunately, when you have a rise in interest rates, guaranteed to be a big problem. If you found this video informative, please give me a thumbs up. If you're from Australia, please give me a thumbs up. Hello to all of you in the land down under. If you found this video informative, then I know you'll find my books, The Money GPS and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. If you go over to Amazon, they have a look inside feature. It's going to allow you to flip through the pages of these books to see if you like them. Take care.